What's up everyone, and welcome back to the channel where we make investing less intimidating and help you build long-term wealth. The stock market can seem confusing, especially with all the misinformation floating around. There are so many myths and misconceptions that it can be tough to know what to believe. That's why in this video we're diving deep into the top 5 stock market myths that are holding people back from achieving financial freedom. We're going to break down these myths one by one, separate fact from fiction, and give you the knowledge you need to make smarter investing decisions. These myths are more common than you think, and they're preventing so many people from taking control of their financial future. So if you're tired of feeling lost or intimidated by the stock market, you're in the right place. Let's debunk these myths and get you on the path to financial success. Let's start by tackling one of the biggest myths, that you need to be rich to start investing. This is simply not true. With the rise of online trading platforms, you can start investing with as little as $5. Platforms like Robinhood and Webull have made investing accessible to everyone. Fractional shares allow you to buy a slice of a share in companies like Apple or Tesla without needing thousands of dollars. The real secret to building wealth isn't about how much money you start with, it's about consistency. By investing consistently, even small amounts, you're giving your money the opportunity to grow over time. Let's tackle myth number 2. The stock market is just like gambling. While both involve risk, they are fundamentally different. Gambling is like flipping a coin, a game of chance where the odds are stacked against you. Investing, on the other hand, is like planting a tree. It's a long-term game that requires patience, research, and strategy. When you invest in a company, you're buying a piece of that business. Successful investors do their research and look for businesses with a solid track record. Investing is not about trying to get rich quick, but about building wealth gradually over time. So remember, investing is not gambling. It's about making informed decisions, diversifying your portfolio, and staying the course. By understanding this, you can make smarter investment choices. Stay patient and let your investments grow over time. Let's debunk another myth. You need to be a financial expert to succeed in the stock market. Finance can seem intimidating, but you don't need a degree in finance to start investing. Think about it. You don't need to be a mechanic to drive a car, right? Investing is similar. You just need to understand the fundamentals. There are tons of resources available to help you learn. Books, websites, podcasts, and YouTube channels break down complex financial concepts into simple language. Educate yourself about different investment strategies and the importance of diversification. If you're still feeling overwhelmed, tools like robo-advisors can help you build a diversified portfolio. So don't let the fear of not being an expert hold you back. Start learning, start small, and remember, the most important investment you can make is in yourself. Let's talk about risk, specifically myth number 4. Stocks are too risky to invest in. It's true that stocks can be volatile in the short term, but historically stocks have outperformed other asset classes over the long term. The stock market is like the ocean. The waves might be rough, but the tide always rises. The key to managing risk in the stock market is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies. Understand your own risk tolerance and invest accordingly. While stocks do come with risk, it's not something to be feared. By diversifying your portfolio and investing for the long term, you can mitigate risk. Understand your risk tolerance and invest accordingly. This way, you can achieve your financial goals. Let's wrap things up by tackling myth number 5. You can't beat the market. It's true that consistently beating the market is incredibly difficult, but it doesn't mean you should settle for average returns. Focus on what you can control: your savings rate, investment expenses, and strategy. By saving more, minimizing fees, and investing in a diversified portfolio, you're already ahead. Stay informed about market trends and new investment opportunities. Remember, investing is a marathon, not a sprint. Don't try to time the market or chase short-term gains. Focus on building a solid investment plan that aligns with your long-term goals. By doing this, you can increase your chances of achieving your financial goals. That's it for today's video. Hopefully, we've busted some of those pesky stock market myths and shown you that investing isn't as scary or complicated as it seems. Remember, The key takeaways are, you don't need to be rich to start. Investing isn't gambling. You don't need to be an expert. Stocks aren't too risky if you're diversified, and you can absolutely take control of your financial future. If you found this video helpful, hit that like button and subscribe to the channel for more investing tips and strategies. And hey, if there are any other financial myths you want us to debunk, drop a comment down below. Remember, the best time to start investing was yesterday, but the second best time is today. So, what are you waiting for? Start building your financial future, one investment at a time. Until next time.